Okay, most of the banks are down because Tony Dwyer has downgraded the financials and says, quote, the two most contrarian calls in today's market would be to expect the 10-year U.S. Treasury yield to peak near current levels and to expect a correction in the financials driven by the banks. Now, you bought the XLF today, okay? Does that mean you disagree?
Yep.
Do you disagree with Tony Dwyer?
Well, you know what, Scott? This is a great example of, I think Tony's been unbelievably spot on. He's talked about banks and tanks. He goes all the way back to late last spring, early summer, and he's been right. And a lot of people were fighting against him on that. I think what we're seeing now, though, is the acceleration that we'd seen out of the banks that started really in November. You can't sustain that forever. So I actually do expect some pauses, some pullbacks. And one of the reasons that the XLF was intriguing to me, Scott, they weren't just going into April or March or something with the very, very short-term options. They were buying a little bit of time because of the fact that they're probably expecting a little bit of volatility, some bumps in the road. Maybe the pause that we're seeing right now potentially out of the financials would be a reason why they wanted to buy a little bit more time. They were going out to May. They were going out to September. They bought 100,000 of the May 37 calls yesterday. As a matter of fact, they have bought 25,000 of the September 40 calls. So there is some understanding, at least my opinion of how I dissected it is, they're looking out in time and they think that the XLF still has some room to the upside, but it might be in a bit of a pause. And in that case, they've got time and they've got low volatility, low implied volatility while they wait. So those are good things. And so I'm right along with them. I continue to have a very, very large positioning in the financials. I'm not getting out of them. I don't disagree with Tony, but I think it's more of a pause rather than a pretty sharp pullback. We'll see how this all plays out. But for right now, I'm holding on to all my financial positions.
Seems to be influencing the way Steve Weiss things are trading today. I want you to listen to what Jim Cramer said this morning about Tony's call and why it's so important to everybody's money.
That was a bold call. I endorse it. Those stocks have moved way up too fast, but that money has to come out of there first before we see tech bottom. I salute him, by the way. I mean, I'm watching all these stocks.
Okay, Weiss, I mean, you take this in two different directions. Number one, do you agree with Tony's call? And Cramer makes an interesting point, right? A lot of money's gone to the banks. You need money to start coming out of some of these cyclical areas like the banks and elsewhere, and it start to going back into tech for tech to have bottomed. Do you agree or disagree?
Well, I disagree. I think that financials can pause, but what happened with the SLR today in terms of not extending it, I think is an indication that the Fed's also ready to remove some of the constraints that they have on the banks and their ability to pay dividends and buy back shares, as well as the loan loss reserves they've taken over the last year or so that will come back into earnings. So, yeah, there may be a pause, but like everything else, they're going to trade in lockstep with what we're seeing in rates right now for a bunch of different reasons. So you can take the name off of any chart and put it out there, and it will look no different than the banks, than the cyclicals, than the tech stocks.
No, but
with the exception of maybe a sell-off
But
here
Steve,
and there.
the point is, if rates are topping out, as Tony suggests,
right,
the banks are going to stop working. It's that simple, right?
Yeah, no,
the money's going to come out of there.
I'm not arguing. I'm saying that. Right. I'm saying there will be a pause, but rates will go up again. So rather than paying taxes on these massive gains that people have had in financials, just be patient. There are other areas of your portfolio where I think you can take profits because those stocks are ahead of themselves and won't recover. Does anybody doubt that rates are going to go to 2% and over time possibly 3%?
No, but I mean they don't have to go to 2%. They don't have to go to 2%.
You doubt the economy.
They don't have to go to 2% next week. I mean, they may get to 2% by the end of the year, but there's a long road between now and the end of the year.